Washington State just passed an income tax. If you're retired or you're planning to retire here, that sentence alone might be enough to make you cross this state off your list. But stay with me for the next few minutes because the real answer is more interesting than the headline. And if you make a decision based on the headline, you might get it wrong. In this year's legislative session, Washington passed engrossed substitute Senate Bill 6346. It creates a 9.9% state income tax. That's a real thing. It's the law, and I'm not going to soften it or spin it. But Washington passed an income tax, and your retirement income is now taxed are two very different claims. One is a fact, the other is what a lot of people are assuming, and it's not true for the overwhelming majority of retirees. So let's get a little bit more specific. Here's how the law is built. It starts with your federal adjusted gross income, and it applies a $1 million standard deduction per household. Only the income above that $1 million line gets taxed at 9.9%. That threshold matters more than anything else in this video, so let's sit with that. If your household's total taxable income, Social Security, pension, IRA, and 401k distributions, everything comes in under $1 million a year, this tax does not apply to you. Not applies at a lower rate, just it does not apply. And one more date that matters, this tax doesn't take effect until January 1st, 2028. It's not active right now, at least at the time of filming this video. You have years of runway to plan around it if you're anywhere near that threshold. Let's run the math instead of guessing. Social Security maxes out around $59,000 a year in 2026. Even if all of it counted and only up to 85% of it ever does, that's roughly $50,000 toward your household total. Add a pension, add IRA withdrawals, add required minimum distributions, which kick in at 73 or 75, depending on your birth year. Even a retiree who saved aggressively, say $2 to $3 million across retirement accounts, is looking at RMDs in the low six figures a year, not seven. Where this actually bites is a narrow slice. Someone with $8 to $10 million or more in traditional retirement accounts where RMDs alone can exceed $400,000 a year, combined with other income. If that's your household, we should talk because there's real planning to do. Roth conversions before 2028 are the biggest lever on the table, but if that's not your household, and for most people watching this, it isn't, this law is a non-event for your retirement income. Now, I also want to preface this and say that none of this is financial advice or legal advice. Of course, it's important to talk to your professionals about that. Now, here's where I want to correct something I hear constantly in comments and at open houses. People confusing this new income tax with Washington's capital gains tax, which has existed since 2022. That is a separate tax. It's a 7% tax on long-term capital gains above an annual deduction, $270,000 as of last year, and it climbs to 9.9% above $1 million in gains. But it specifically exempts retirement accounts. Money inside of a 401k or an IRA, a Roth, a pension, none of it is touched. And it exempts the sale of real estate, including your home. So if your retirement plan is to live off Social Security, a pension, and IRA withdrawals and eventually sell the house, the capital gains tax was never going to touch you. The only people who feel it are those with large non-retirement brokerage accounts realizing gains above the threshold in a given year. Here's the part that actually saves South Sound retirees money, and almost nobody talks about it on YouTube. Washington runs a senior and disabled persons property tax exemption program, and it's pretty generous. If you're 61 years old or older, own and occupy your home, and your household income falls under your county's threshold, you get a reduction in your assessed value up to 60% off in the top tier. These thresholds are set county by county. In Thurston County for 2026, the top tier, a 60% reduction in assessed value, applies at household incomes up to $42,000. The next tier, a 35% reduction, goes up to $51,000. And there's a third tier up to $59,000 where your assessed value gets frozen at whatever it was when you qualified, meaning rising home values around you stop increasing your tax bill. Pierce County's numbers run a bit higher, $46,000, $55,000, and $64,000 for the same 3 tiers. And if your income is above those thresholds, there's a deferral program. You can defer your property tax at 5% simple interest repaid when the home sells or transfers. This is the kind of detail that never makes it into a best states retire list or article, and it's worth real money every single year that you own the home. Now, I'm not gonna sell you a fairy tale because you'll find the fine print eventually, and I'd rather you just hear it. Washington leans hard on sales tax to fund the state since there's no income tax on wages, or as we just covered, on retirement income. Combined state and local rates for sales tax run up to around 10.6% in parts of the state. Groceries and prescription drugs are exempt, which kind of softens the day-to-day hit, but big purchases like a car or a boat or remodeling your house, those types of things really carry some significant tax. And Washington has its own estate tax separate from the federal one, with a $3 million exclusion and rates that climb from there. If your estate is in that range, this is a conversation for an estate attorney. But I'd rather flag that than let you find out from your kid's accountant. Put it together, no tax on Social Security, no tax on pensions, no tax on IRA and 401k withdrawals, no tax on the sale of your home, a new income tax that for virtually every retiree watching this won't apply for years, if ever, and a property tax exemption program that can cut your county tax bill by more than half. This isn't a spin on numbers, those are the numbers. So if you want to know exactly where your household lands on these thresholds, Thurston County, Pierce County, or wherever in the South Sound you're looking, that's a conversation. It's not necessarily a comment though. If you have a comment for this video, leave it below. Also below in this video, you'll see a link to book a call with me, and I would be happy to walk you through the county specific numbers for your situation.